Europe has a long history of turning crisis into capability. Danijel Višević, general partner at World Fund, argues we're at another such moment, where climate, energy, and geopolitical pressure can become a new engine of European innovation. In this talk, we'll focus on what it takes for capital to act with intent, not just conviction. Please welcome Danijel Višević from World Fund.
So I want to take you back into the year 1951. Europe was still in ruins after the most devastating war in human history, but Europeans were not only rebuilding their cities, we've been rebuilding trust. That year, 6 nations signed the Treaty of Paris, creating the European coal and steel community because coal and steel were the backbone of war. By integrating these industries, Europe chose cooperation over conflict. And we today should be aware that this was an act of radical innovation, not just technological, but political, economical, cultural. It worked. Let me share with you a very personal example. So my wife's mother is French, her father is German, a couple unimaginable right after World War II. And fast forward, Sylvie married me, a Croatian, Bosnian, German. Now imagine what our children are. They're just Europeans. Back to 1951. Europe chose cooperation over conflict, so we turned crisis into collaboration. And since then, that has become the European way. We don't break under pressure. We build together. And today, we must do it again. We are now in something what many call the age of polycrisis. A war in Europe, the climate crisis, tech disruption, supply chain fragility, a fragmentation of the global order. That's one way to look at it. But look, this isn't the age of polycrisis. It's the age of opportunity for those who know how to collaborate. And this is Europe's strength, collaboration. Europe has always found strength in crisis. And today's challenges, they're not just tests, they're calls to action. Calls to rethink our economies, to reinvent what European collaboration and sovereignty really mean in the 21st century. Sovereignty today is not just about flags, borders, armies, it's about semiconductors, raw materials, clean energy, data, AI, food systems. But let's face the reality. Europe produces less than 10% of the semiconductors it consumes. We import 98% of our rare earths, 97% of our lithium, 80% of solar panels, and 2/3 of batteries are made in Asia. Let me be even clearer. The tools of the green, digital, and industrial future are being built elsewhere. And if we don't reverse that, Europe risks becoming a spectator in a game it helped invent. We've been here before, and we know how to respond. Remember, when the Berlin Wall fell, we didn't collapse under the weight of integration. We expanded prosperity to more than 100 million people in Central and Eastern Europe. During COVID, Europe launched the 800 billion Next Generation EU Fund. So we didn't just invent the leading vaccine in light speed, the leading vaccine that is called by the Americans Pfizer vaccine, but it was invented by BioNTech, German migrants based in Mainz. So we not only fought COVID, we used this crisis to commit to the green and digital transition like never before. And in the wake of Russia's war in Ukraine, we cut our Russian gas dependency from 40 to only 11% in under 2 years. So that's an industrial transformation in real time. So when the stakes are high, Europe doesn't just respond, it reinvents. We reinvent ourselves. And today we must act again. And this time our challenge is to build resilience through investment. But how, given this data? Over the last decade, Europe raised 7 times less venture capital than the United States. Only 15% of European climate tech startups reach Series B funding. In the US, it's 25%. And that funding gap since 2015 is per year over 2.7 billion euros in missed scale-up capital. Here's the hopeful part. Data show that we are picking up, and Europe has extraordinary companies ready to lead. I'll just mention 3 examples. And yes, full disclosure, those 3 companies are companies World Fund, so we invested in. Scilib is turning battery waste into the raw materials we need by recovering more than 90% of the critical minerals. IQM from Finland is selling more quantum computers than any other quantum company in the world. Planet A Foods from Germany is replacing cacao with climate-resilient European crops. So they are disrupting one of the most vulnerable and deforestation-linked supply chains in the world. And these are not just scale-ups. These companies are growing to become the pillars of European sovereignty, and they're not alone. What we need is bold policy, and it's on the way. You heard that. What we also need is ambitious scale-up capital. It's also on its way. We need public-private partnerships that amplify the opportunity in the making. So, good science, but above all, we need a shared mission to invest in those critical technologies that serve European values, that serve European resilience, and recreate our leadership. This is not a time for hesitation, it's a time for movement, missions, and moonshots. Let's create hundreds of companies like Scilib, IQM, and Planet A Foods. Let's make Europe not only the continent of innovation, but the continent of industrial scale. I began with the year 1951, when Europe, devastated by war, chose to build peace by binding coal and steel. Europeans decided on collaboration, and that act of radical innovation reshaped the future and made my own European family possible. And we've done this again and again. We responded to the old crisis with wind and sun. We responded to a divided continent with unity and to a pandemic with the largest green stimulus in our history. So the story of Europe is not one of stagnation, it's one of reinvention. We know how to turn crisis into collaboration and competitiveness. But the next chapter isn't written yet. It depends on whether we choose to lead again, to choose to invest, to collaborate, to believe. So remember, Europe doesn't break under pressure because we build together. Now's the time to do this again. Thank you.
Venture performance has traditionally been measured in returns alone, but that definition is increasingly questioned. Heidi Lindvall, partner at Pale Blue Dot, argues that every company and every fund has impact, whether acknowledged or not. In this talk, she'll explore what great really should mean in European venture, and why responsibility, not just performance, must be part of how success is judged. Also vice versa, of course. Please welcome Heidi Lindvall from Pale Blue Dot.
If 2 funds both have top quartile performance, are they equally successful? For decades, we've been measuring success in VC almost exclusively by financial success. DPI, TVPI, IRR, with 2x fund being a good fund and a 3x fund being top quartile. But times have changed and industries have matured. And with that, with information being transparent, we do need a new way of looking at success. Let me be clear, performance will always matter. Without returns, the rest isn't possible. Now, but performance isn't excellence. Performance is the bare minimum to stay in the game. And if you're compromising a performance, then we're not playing the same game. Now, venture saves society. 75% of all of the value in the IPO market in the US have gone to venture-backed companies, or come from venture-backed companies. 92% on R&D spending. In the US, 12% of the private workforce work for VC-funded companies. And in Europe, that's slightly lower. It's at 5%, but it is still significant. So not only does venture shape societies, venture is actually part of deciding who gets funded at all. So that means that capital is not neutral. Every check that you write actually is a vote for what you want the future to look like. With that comes responsibility, and with that comes risk. Now, we've seen more than before venture funds getting scrutinized for what they invest in and whom. So more than ever before, venture funds are having to really think about their cultural and risk and what that actually looks like. Now, I want to propose a new way of actually looking at success, and I want to expand on this formula and what we before have been saying. Now, it starts with brand. Brand is no longer only your website or your logo. Brand is what people feel when they think about your brand. Brand is behavioral patterns that are tracked over time and become consistent. Then we have values. Values is what you do when things go wrong. So values is what you do behind the door, is how you act, the beliefs you have, and what actually guides you. Now, things always go wrong, and this is when we see what matters. In venture, we often say that you should only back your winners, but actually what you do behind closed door when things are not going well is also part of building who you actually are and what your future will look like. And then we have impact. Now, impact, you can look at 2 levels. You can look at the impact that your firm has on VC, and then you can look at the impact that your portfolio has on society. On a VC level, we often think about what is the actual impact that our firm can have. How do we shape society by how we act and what we say? We believe that climate is the biggest macroeconomic shift that we're going through. And if we can actually prove that to LPs, then we will have outsized returns. That also means that we can funnel more money back into climate, which actually will have a massive impact. And then on a portfolio level, impact is anything by who you invest in and what they do. How do they treat their employees? What do they do with the money when they're successful? And then, of course, what problem are they solving and how is that impacting society? So there's multiple ways of looking at impact. So I want to put these together and have a new scorecard where success equals performance times trust. And trust stands for brand, values, as well as impact. Trust compounds returns, and the returns compound trust. So it looks something like this, where low performance and low trust funds, gone, out of the game. Low performance and high trust, I don't know if you can see this, irrelevant. Well-liked, value-driven, but they become irrelevant very fast. And then we have high performance and high trust, one-cycle wonders. You'll see these firms, they'll look good, but they won't last. And then we have high performance and high trust. And these are enduring firms that you'll see last for at least 3 cycles. So with performance and trust, I think we have a new way of actually looking at what venture success looks like, where it's not just what you do, but also how you've earned it. And that, to me, is meaningful. Thank you.
Narina, let's first get the introduction of you out of the way. You are, of course, representing Regeneration VC. We've had Regeneration here at the conference before. You are a fund dedicated to circularity, but maybe do your own introduction and then we'll dive into it.
No, absolutely. Great to be here. So Narina Mnatsakanian, I'm partner and chief impact officer at Regeneration VC. And before venture, I was more in institutional capital and pension funds and asset managers. So I can bring a bit of 2 worlds to this conversation.
So now let me ask both of you the real hard question. When times get tough, don't these good values fall out of the window and the brand and all this? All you really need is the money?
Money will always be there, as in those high-performing funds will always win. But when you start comparing high-performing funds, it's going to go to values. It's going to go to how you actually behave. It's going to go to what reputation lasts. So again, I think when, you'll have those one-cycle wonders. You'll have those great funds that do well in bad times. But if they don't build up a brand and reputation where founders will choose them, I don't think it's going to last.
Narina?
I think it's important, the past performance is important, but past performance is not guarantee of future performance. We all know that, but you tend to forget. And if you think about, what are we actually funding as VC? Are we funding more linear and extractive business models that will cause overconsumption, and we're already, crossing 7 of the 9 planetary boundaries? Or do we actually want to fund the new type of world and technologies which are more regenerative and circular, and where we can actually live and survive as species within the humanitary boundaries in the long term? And that's where it also comes to, we were talking earlier this morning about getting more pension money into venture, and how do we do that? So if you think about from the pensioner and pension fund perspective, you do want to offer your beneficiaries good returns, but you also want to retire in a livable world. And I think that that's important to think, what are we actually funding? And that's where the other factors like impact, values, trust, brand, your impact, and the portfolio you're funding come into play much more.
DPI is objective. Performance is objective. How much money do you actually produce? Brand, trust, values, these words are a bit harder. As an example, I think some would say that the brand value of Peter Thiel and Founders Fund is incredible, and also the performance. And there are others that, to them, Peter Thiel is a massive turnoff, and they would never touch that fund. Can you talk a bit about how you think about the lack of objectivity in this scale?
The thing is, you will obviously attract the type of founders that like your brand. You will attract the kind of people who are attracted to your values and who want to create that kind of world. And in the same way, even if we have great performance, us being a climate fund, I don't think we'll ever attract people who don't believe that climate change is real. Like, I don't think there's a certain political parties that I don't think ever will appeal to us, and that is just the way it is. But saying that, I do think that you have to have a certain type of behavior that appeals to people everywhere, whether you believe climate is real or not. People are going to expect to have investors that you can call, investors that will actually pick up your phone, that will actually care about their founders even when things are bad. And we've seen so many funds fall because of this. They just haven't gotten the basic rights. They've behaved badly at board meetings. They just didn't give a shit. They just wanted the money. And now a lot of those fund managers have had to leave because it's hurting the brand. So I do think that even if it's really hard to define what does good behavior look like, it's really hard to say what are the good values, etc. I do think that there's certain behavior, there's certain things like kindness and decency and integrity that we kind of expect from everyone. So, and I think we're going more of that way of actually defining that what does that look like and what do we expect from our investors.
Narina, do you want to comment on?
Yeah, I think also on the question of like how do you measure other factors. I mean, if you look at the impact, you can absolutely measure and have different KPIs. I mean, we focus on circularity. I mean, if you look at emissions, for example, half is energy and climate, and the other half is also materials. What are we actually? What kind of materials are we building from, and can we make that more sustainable? How do we deal with waste? So you can absolutely look at what are some of the biggest problems in terms of emissions, linear resource waste, toxicity. I mean, that's another area we haven't been talking that much, but it's super important. And looking at how can you have solutions which actually replacing toxics that have more sustainable material, turn waste into new products, and keep materials in circulation. So that is something that you can also measure and track, and you can have your financial performance and you can have your impact performance. And I think the companies that would you would really hope that they do the best in the coming years are where you can have significant growth and financial success, both financially, but then also scaling impact, so addressing some of those big critical problems.
Heidi, you propose a framework here. Do you feel that LPs are sophisticated in this way? Do you see LPs today investing with a framework similar to that in mind? Or do you feel that there's still a long way to go?
I have been very positively surprised how people have, and a lot of LPs have really started asking more for the brand and really started looking beyond performance. And like I said, performance will always matter. Like, we shouldn't discuss on whether we should compromise on that to have an impact. To me, that's not a conversation. Like, people do want to make money, and that's why they're in the game. But I have seen a trend on that. And as an example, we've actually turned a table. We do these things called value alignment assessments with our LPs. So we interview our LPs to try to figure out what their values are, what they think about diversity, how they invest, where they put the money that we return. So we actually have an idea of, if you're going to give us money and then put it into oil, then it doesn't feel like we're doing a great job. So we're actually turning the table, and a lot of people are really appreciating that. They actually are starting to look at what they do in-house, and I feel like we need to change the game by start asking these questions. And I mean, so much crap has been done by the VC industry when we haven't been asking these questions. And now, like I said, when all this information is available, people being called out. So even whether you care or not, it kind of becomes a necessity to start thinking beyond performance.
Narina, any final remarks?
Yeah, no, we see that as well. I think with LPs, we have increasingly mission-aligned LPs who believe in our vision and the future. So I think that LPs play a huge role in determining how and where is capital allocated.
Critical minerals sit at the center of Europe's energy transition. Yet, supply remains constrained by cost, geopolitics, and environmental impact. Biology is emerging as a credible alternative to traditional extraction. Dr. Isabella Fandrych, partner at Nucleus Capital, will explore how bio-based approaches can unlock critical minerals and what this means for investors backing the next generation of industrial biotech. Please welcome Dr. Isabella Fandrych from Nucleus Capital.
Imagine tiny microbes digging for rare earth minerals. Sounds crazy, right? It's not quite true that microbes really use picks and shovels to extract minerals from the earth. But in a sense, microbes have been mining for more than thousands of years. There's evidence that China used the oxidative capabilities of bacteria to unlock the copper production substantially. So, long before humanity built the first huge machines, the first huge excavators, nature has already been providing solutions to mining. And what's fascinating is that those very same microbes could hold an unlock for the next industrial revolution. Fast forward today, we are racing to decarbonize our production systems. So we're looking into battery technology, into wind turbines, into solar panels, into grid build-out. But the challenge here is all of these technologies rely on critical minerals such as cobalt, lithium, copper. And there we have supply chains that are anything but green. So we are strip mining deserts, we are draining brines, and we are shipping millions of tons of metals and rocks across the globe in vessels that are powered by petrochemicals. And what is more severe is that these very same supply chains are under tremendous stress due to ever declining resource quality. So while we already have 5 countries controlling the majority of the production of these minerals, we even more have a challenge around the sources of these minerals because the quality of the resources is degrading. We have lower and lower concentrations in the rocks, lower and lower concentrations in the brines. For example, copper, 70% of copper is locked into low-grade copper, meaning you need to move more tons of rocks to really extract the target copper. And that implies that we need more electricity, we need more water, more chemicals to extract the same minerals. So clearly we need a better way of mining. And here is a fascinating insight on biology. Biology really holds a huge potential for us to increase our production capacity and to become more efficient and more economical in mining. And today I'm going to present to you 3 exciting technologies in biology. So number one is using living organisms, microbes, to really separate rock from metal. This is already being done in copper. There was a big announcement last week on Rio Tinto now working on a collaboration. Secondly, there is protein engineering, where you use the cell's tiniest building blocks to use the magnetic structures to extract minerals such as lithium and magnesium and manganese from liquid waste streams. And that has a huge impact because you need less chemicals in that process. And then thirdly, you could use plants, and you have plants that accumulate nickel from underground. They accumulate it through their roots and bring it up so that you can harvest the plants and ultimately refine for the nickel. So this sounds like science fiction, right? The reality is there are already exciting companies working on these technologies. So in microbial inoculation, there's a company called Endolith from the US, and they're using biology to really already alleviate the production and really increase the yields in copper mines. There's protein engineering companies such as Magmatic Bio. They use the proteins to extract the manganese from lithium-rich brines. And there is a company in France called Genomines that has engineered plants in order to extract nickel from underground. So biology really provides a potential to be the backbone of the next industrial decarbonization route. We see enablement in increasing the yields in ever-declining resources. We see a potential to reduce harmful side effects, and we can even use biology in urban mining, such as recycling. If you are an innovator looking into bold solutions tied to biology or industrial decarbonization, industrial resilience, come talk to us.
Nuclear is re-entering the European energy debate, not as ideology, but as a question of scale, resilience, and baseload reality. As power demand rises and decarbonization timelines tighten, investors are being forced to reassess old assumptions. Jordan Billiald, principal at IQ Capital, will make the case for nuclear and explain where venture capital fits in a sector long dominated by infrastructure and policy. Please welcome Jordan Billiald from IQ Capital.
My name is Jordan from IQ Capital. We are an early stage venture capital firm based in London. Thank you to Andreas for the invite to speak today. I made the mistake of mentioning small modular reactors to Andreas, and now here I am to make the case for the nuclear industry at large. The case for nuclear for me is actually a case for climate and net zero, and that speaks directly to our European values. It's also a case for reindustrialization and European prosperity, and it's a case for energy security and our sovereignty. Let me start by asking everybody here, raise your hand if you think that we've made progress in Europe in the last few decades towards net zero. Raise your hand if you think that's true. In the UK, we've almost totally phased out coal, and renewables now account for around 45% of our energy usage. Over the last few years, countries like Spain, Portugal, Germany, and Scotland have had 100% renewable days. But what have we really done over the last few decades? I would argue that we have deindustrialized. We have outsourced our manufacturing, we have outsourced our primary industries, and with it we have outsourced our carbon emissions. And in fact, our carbon consumption has increased. Of course, we have chronically underinvested in our public infrastructure. And today, we're outsourcing AI and we're outsourcing tokens. Data centers, factories, hospitals, trains, all of these need reliable baseload energy. And if we are serious about reindustrialization in Europe, if we are serious about bringing manufacturing back to Europe, bringing new data centers and growing our economy, and at the same time, we want to remain true to our values and achieve our climate and net zero goals, we need nuclear energy. Nuclear energy is the only way to decarbonize baseload energy at scale. Of course, we need to continue to develop renewables and long-duration energy storage. But renewables are intermittent, and we can only build renewable capacity at the source. We need reliable power that doesn't vanish for days during cold snaps, heat waves, and low wind periods. Increasing the proportion of energy we source from renewables over the next few decades will also depend on long-duration energy storage and significant and costly upgrades to our grid infrastructure. Nuclear power is dispatchable. We can turn it on and off, we can ramp it up and down, and we can build energy generating capacity where we need it most. Reliability and resilience are national security issues now. The case for nuclear is about security and sovereignty. In recent years, we've learned the hard way that when we depend too heavily on imported fossil fuels and fragile supply chains, energy prices can spike, politics will intrude, and industry and consumers alike will suffer. Nuclear power reduces energy price volatility because nuclear fuel is compact, can be stockpiled, and represents a far smaller fraction of the total operating cost of a power plant. In a world of cyber attacks, extreme weather, and extreme geopolitical uncertainty, energy security is not a luxury that we can afford, it's a requirement. Nuclear's advantages are practical, not ideological. Let me ask you one more question. Raise your hand if you feel supporting nuclear is in some sense controversial. Yeah, a few people in the room. I want to emphasize that my support of nuclear is practical and not ideological, and supporting nuclear should be a practical conclusion. Many people, and rightly so, have environmental and safety concerns about nuclear. Fukushima has cast a long shadow over the nuclear industry and nuclear technologies since 2011. But the fact is that new reactor designs often have multiple layers of containment, passive safety features, and advanced fourth-generation reactor designs and technologies can almost physically eliminate the possibility of a severe incident altogether. Used nuclear fuel is contained and managed, not released into the air. Many countries pursue deep geological storage. The challenge with nuclear waste is one of engineering and governance. Fossil fuels routinely harm us every day, you, your children, and society at large, day in, day out, through air pollution and carbon emissions. Even if they don't make the headlines in the same way, this harm is widespread and ongoing. If we truly care about the health of society and the environment, then the question should not be, is nuclear the perfect solution? The question should be, can we operate nuclear safely to deliver the major climate and reliability benefits that we know it can, whilst minimizing and managing risk? The real challenge for nuclear is in cost and delivery. Many recent Western nuclear projects have been delivered over budget and behind schedule. I don't deny that. In fact, I recommend a great book on this topic, How Big Things Get Done, by Danish economic geographer Bent Flyberg. The cost of nuclear power plants is massively prohibitive. The challenge of raising capital to finance them and the cost of that capital is a challenge even for nation states and has a major impact on the eventual cost of the power produced by a nuclear power plant. But the fact is that issues with delivering large infrastructure projects are symptomatic of the challenges and problems that we are facing in Europe right now. Complex and fragmented regulatory landscapes, regulation that cares more about the process than outcomes, a fragmented market limiting economies of scale, NIMBYism on a local and national and international level, and a lack of long-term and strategic thinking in our politics, depth, maturity, and risk appetite of our financial markets. We need to keep existing power plants running longer. That's often the cheapest and most effective way to preserve massive amounts of clean energy. Standardize reactor designs, so we're not doing bespoke nuclear projects over and over again. Modernize our nuclear industrial regulation, and the UK is about to make major steps in this direction. And we need to invest in the nuclear talent pool and supply chain, so we can build rapidly at scale and not slowly and bespoke. Finally, we need to encourage long-term investment with stable policy and international cooperation. Countries and jurisdictions that offer that stability will win out in the end. My take-home point is we must support and adopt new nuclear technologies. Small modular reactors have the potential to solve a lot of the issues that I've outlined, solve the issue of how we finance nuclear, and help us achieve promised economies of scale. Let me end with, if we want to lead as Europe on climate, on industry, on resilience, then our existing nuclear capacity must be maintained. We must build new nuclear capacity, and new nuclear technologies must be supported and adopted. Thank you.
As electrification accelerates across industry, transport, and AI-driven economy, energy has become a strategic constraint for Europe. European energy sovereignty is now urgent. Moritz Jungmann, partner at Future Energy Ventures, will discuss what it realistically takes to get there. Please welcome Moritz Jungmann, partner at Future Energy Ventures, in conversation with yours truly, Andreas Munkholm, co-founder of EUVC.
Moritz, everyone's talking about AI. Everyone's talking about how the future is very near. But it's also very apparent that we truly do need a lot of energy for that. Are we at all ready for that in Europe?
Yes, I think the bottleneck is not the energy or the capacity that we have in the European market. In the end, and I think we'll probably touch on the topic later, it's getting access to the energy. But overall, if we look at the capacity that we have built out in Europe, it's around, like, let's say, 1,000 gigawatt. We have around 50% of it built up with renewables. I think we are well set to meet the data center demand. I think it's around 200 terawatt by 2030 that needs to be built. It's a huge opportunity to invest. But of course, you need to look where you can actually connect these data centers and where you get the energy from.
So what you're saying is we can create energy. That's not the big issue. The big issue is the grid and how we make that actually ready for it. Is that what you're saying?
Exactly. I think we all know infrastructure, especially critical infrastructure, is a very regulated asset. There was not a lot of innovation. I was working for quite some time for a large German grid company. They did not have an R&D function. So there was no development into how the grid can actually function more innovative. But we're seeing now a lot of claims about that the throughput you actually put onto the grid, you can lift up by 10, 20, 30%, depending on weather conditions, depending, of course, also on volatility, and similar, let's say, other factors that you can use them on.
So are you saying that provided we fix the grid, which we should talk about how we get there, whether you think it's feasible, you're saying we actually are in a good place?
Yes, I think from a pure energy capacity perspective, we're in a good place. Why is that? Because there's a deindustrialization happening, which frees up capacity, which we can now reroute to other consumption takeovers.
So then tell me, are we taking the steps? Is it feasible that we get the grid working so that we actually can bring about the digitization of industry, the electrification of our mobility space, and of course also AI?
Totally. I wouldn't know why we shouldn't be able to do it. I think, of course, everybody is stressing that the grid is under stress. And that's, of course, true because we are in a shift of our energy status quo. We were producing energy centrally, and we're now moving from this very centralistic system to a very decentralized. And this means that now power generation is actually happening everywhere. The DSO, the distribution system operators, they were never meant to actually orchestrate this kind of power flows. But it doesn't mean that they cannot do it.
So in your view, when we hear the talks about how we're going to run out of energy, it's all a matter of how cheap you can get energy because energy is the core input to compute, which is, of course, what we need for AI. That's all fear-mongering. That's all blabber from people that are on.
I think you're touching on a different topic, which is price. And I think that is, of course, if we compare to the US or to other large economies, is a big problem. Energy price is expensive, but it's not very expensive because how we produce it. It's rather expensive on the fees that we stack on top of it. So it's a question again of competitiveness. How do I actually want to build out this new system so that I can onboard different or new levels on consumption?
So I want to ask you one final question. What are the key steps we got to take for Europe to be completely ready for what's ahead of us when it comes to the digitalization, the mobility that's being electrified, and of course AI?
I think, and this is also what the conference is about, it's about speed of allocating capital. And it of course addresses every, let's say, capital allocator in the value chain, from VC to infra, buyout, and other means. And for VC, I think what I was saying, capacity is not a problem. I think building out renewable capacity, we have shown that we can add around 100 gigawatt per year as we speak. We probably need to move it up to 110, 20, 30 to reach the capacity for all new electrified, for electrifying the new sectors. But what it also means, shifting a very centralized system to a decentralized system, is that we need to invest in a lot of orchestration power, which is usually software. We learned that the energy utilities did not really have the capacity to build up this know-how. And this is where we see a huge opportunity to invest in young or mature startups that can bring this know-how and this expertise to these markets. And I think also here, touching on the sovereignty topic again, in the end, power markets are still very isolated. They're very enclosed. Of course, we still buy a lot of, or import a lot of fuels, a lot of LNG gas from the US, but with pushing forward the electrification, with pushing forward the renewable build-out, which we already have proven that we can do it, it's now on us to focus on the intermittency. Some want to invest in nuclear, I wouldn't. But maybe invest a little bit more in battery technologies, then can look into faster, longer storage components. But if we can manage this, and if we can to align on a policy level and agree on what assets should actually be connected to the grid first, because the process of the past and still the process of today for many regions is still the wind town principle. So who comes first gets it. And I think this does really make sense if we're thinking about decoupling our energy needs from geopolitical confrontations. And hence, I believe we have a great opportunity for Europe to become more energy independent, which hopefully also helps to stay and become a little bit more sovereign. Thank you.
And a great opportunity for a 250 million euro first energy ventures fund.
Yes.
Thank you so much, my friend.